Perfect.
Okay, over to you, Kim.
Thank you. Okay, well, everyone, thank you so much for joining us for our first ever webinar and one of the final few community events that we've got for the remainder of the year. Big thank you to Anil for joining us today. Anil is with 9 Pillars and he will be giving us a really good understanding of the components of cash flow and also the key strategies that you can use and implement to manage and improve it. So I'll pass on to Anil and this should be great. So
Excellent. Thank you very much, Kim. I might just, do you want me to make you just turn your video off again? And
yeah, that'd be great. I'll do that now.
You might need to, oh, you've done that? Yep. Okay. All right. So thank you very much, Kim. As I said, welcome everyone. And it's great that you're able to take the time out. What I'm going to do, I'll just go through this quick presentation. You should be able to see this, the slideshow up on your screen. So just maybe type in something and say, yes, can see that fine. That'd be great. Excellent. Thanks, Lucien. I'll introduce Lucien in a minute as well. All right, so firstly, thank you very much. As I've said there, I know your time is very valuable. We're all very, very busy, so really appreciate you taking the time out and especially over lunch. If you are having lunch at the same time, then that's one of the beauties of running webinars. You can, you can attend from anywhere and hopefully do other things in the background, but hopefully pay attention at the same time. All right, so we've got a lot to cover today. I'm going to go through things fairly quickly. We want to keep it to about 45 minutes. And so I'll go through things quite quickly, but what we'll do is, if you do want hand with anything afterwards, then we'll let you know how you can do that as well. Totally understand that financials aren't aren't everyone's cup of tea. It's something that not everyone's comfortable with. So happy to help you out with a better understanding of your financials if need be, one-on-one afterwards. And I'll tell you a bit more about that too. All right, so just a very quick introduction to myself. I'll explain who the two people are on the screen. Firstly, myself on the left-hand side. My name is Anil. I'm an accountant by training. I've been working with businesses and analysing businesses and helping businesses improve for over 25 years, ever since I started as an accountant. And a lot of that time was working in the commercial side of accounting, analysing businesses, managing performance, reporting on performance, getting involved with corporate acquisitions and so on. So, but about 12 years ago, I started my own coaching and consulting business. And in the last 3 or 4 years, I merged my business with the guy on the right of the screen. His name's Lucien. Lucien's also on the call today. So I've got a finance and business management background, whereas Lucien's background is marketing. All right, so he spent many years at American Express and has a lot of experience, ran his own marketing agency for some time. So our business, 9 Pillars, is really a full-service consulting and coaching organisation. And I'll let you know a bit more about what we do down the track. But we do everything from marketing, marketing plans, websites, online marketing. But on Lucien's side and my side, it's more about business management, helping people manage their growth, team development, planning, and strategies around that. All right, so that's a very quick introduction to us and what 9 Pillars does. So as Kim mentioned, what we want to cover today, I want to give you a really good understanding of cash flow, but also what makes up cash flow and how to improve it. So these are the objectives for today's presentation. As I said, learn the components of cash flow and how to tweak them. Understand your P&L, which is your profit and loss statement, and really understand how it works, how to read it, and why it is your key performance report to really gauge how your business is performing. Then I want to show you 5 key ways to grow the profitability of your business. When I met with Kim, I know that there's been other people who've presented on marketing and those sorts of things. So I will touch a bit on that, but I think it ties in really well with this whole area of cash flow because profits are one of the foundational elements of having good cash flow. So I really want to go through 5 key ways that we work with our business clients to help them improve their business profitability, and how that obviously impacts cash flow. Next is all about understanding the cash gap and how why businesses can actually find or go through cash flow strains as they grow. All right, and I've got a very easy visual representation to explain why that can happen. And lastly, I always tell people that the profit is in the price, and pricing is so important, and getting your pricing right. So I want to show you why that's so important, and how it really does impact on your profitability and cash flow. All right. Now, at any time, if anyone's got any questions, then feel free to either raise your hand. Once again, on your screen, there should be a way to raise your hand if you have a question, or just type something into your chat box. All right, and I will ask you to provide me some feedback, and I'll have some questions for all of you as part of this presentation too. Okay. So first of all, let me share with you some of the problems and frustrations that I see business people have in this whole area of financial management and cash flow management. I've been working in this area for a long time. I've come across a lot of businesses. So I just want to share with you what the key issues are that they have. So first of all, I totally understand that people aren't comfortable with numbers, and it can seem like a different language to them. And it is in some ways. But I always say that numbers are the language of business. So you really need to understand numbers and understand how to read them, how to speak them, to really better manage your business and grow your business and make it healthy and strong. All right, so that's the first issue that people have. It's just don't understand numbers at all. Secondly is, if they do have some idea, there's so many numbers to look at, they're not sure which numbers are the key ones to focus on. So I'm going to take you through some key numbers that I would recommend, and happy to maybe open it up and find out from other people on the call what are some numbers that they look at in their business as well. Another issue that people have is because they're not comfortable with numbers, they can really just put in their head in the sand, not even worry about looking at the numbers, just go on gut feel that they're doing the activity, therefore everything must be, they must be doing everything right, and not really looking at their numbers and not worry too much about them. But what that can lead to, all of those things can lead you to flying blind in your business. Okay, so numbers are like, it's like when you play a sport, play a game, let's say a game of rugby or soccer or whatever your ball game is. If you play without really keeping score, then you're not really playing professionally. You're really just playing for the fun of it. And that's a surefire way to not maximize the potential that you have in the business, and obviously then achieve all the financial goals and personal goals that you have. So really, we need to, we don't want to be in this situation like these people on the screen. We want to take those masks off and really know what you're doing. All right, so on the flip side, where we want to be is really crack this code, understand numbers and understand how to read them. We want to then have a lot more confidence, So a couple of examples here. I worked with a guy who, his father died. He was probably in his late 20s. He took over the business. It was a self-storage business, just based out here in Western Sydney. And he wanted to expand. He felt things were going well, but he just didn't have the confidence to invest in expanding the facility. And he was quite a conservative guy, which is fine. So what I helped him do was really put together a financial model and a cash flow forecast to show what sort of the occupancy rates he'd have to hit, and how that cash flow would look from the investment he'd need to make, the loans that he'd have to repay, the income he would generate from that new investment and that expanded facility. And he realized how it was a no-brainer. Okay. Even with being conservative with our projections, it was a no-brainer. So he went ahead and made that investment, expanded his facility, and now with that additional cash flows generated from that business, he's now expanded into 2 more facilities. Okay, so it's just a great example of how knowing the numbers, looking at numbers, will give you confidence to do what you feel might be the right thing, but it may be holding you back if you're not quite sure 100%. And linked to that, I suppose, is this whole idea of being able to make better decisions in your business. All right, so I'll take you through some key numbers and how I help people look at their numbers, and it's all around designed to help you make better decisions, more objective decisions, less emotional decisions in your business, and all of that leads to you having a lot stronger business. And this is where we want to end up, where we're generating surplus cash to either reinvest in the business or to take out and invest in property or whatever your preferred investment method is. Okay, so it's all about generating surplus so you can invest and create wealth for yourself. Okay, so what I want to do is hand it over to you. What I'd like you to do in your chat box is just write down, what are some areas that you would like to develop or have a better understanding in around financial management and cash flow management, or conversely, what you'd like to learn out of this, this quick webinar today. All right, so I'll just give you just a minute or so, grab your chat box and your keyboard and type it in. And I'll just read them out as I see them. So is it, for example, really better understanding how to read your profit and loss? Are there particular cash flow issues that you have, whether it's your particular business, your industry, customers, suppliers? What are the things that are that you'd like to learn or discuss? Because I may not cover everything in this short presentation, but happy to try to cover off some of the things that people have questions about. All right. Now, I'm not seeing much come through. Can you just so I know that everyone's still out there, because I can't really unmute everyone, just type in and just say nothing if, nothing springs to mind if that's the case. Okay, so Paul said, awareness of any tips to manage cash flow when things are tight. Okay, good. We'll cover that. Yep. All right, good. So some people are saying nothing or just happy to go through the presentation. So we'll do that. Okay, so someone said here, what applications are out there? Is that in terms of cash flow management? Okay. All right, we might touch on that as well. All right, so how do we get there? How do we go from this place where we don't quite understand, we know we should be understanding or have a better idea of our financials and all those numbers in the business, but we're not sure how we're going to get there. So I've just got someone else who's written in here. Someone said here, I don't need to read out names, but we are a cash negative business, service-based, and have struggled with cash flow in the past. Currently okay, but have a lack of contingency. Yep, and we call that the cash flow cliff. We really ideally will have 3 to 6 months of your monthly expenses, equivalent of your monthly expenses, in the bank at any time. So let's say your monthly expenses are $10,000 a month. Ideally you'd have $30,000 to $60,000 of cash in the bank to cover all of those, anything unforeseen. Okay, so what strategies can we put in place to prevent cash flow shortfalls in the future? All right, good. All right, so back to the presentation. So how do we get there? So what I want to do is cover off and share with you 5 key ways to improve your cash flow. All right, so and I think that will cover off most of the questions or the issues that people are having. Okay, so the first is really understanding what are the components of cash flow. All right, so what I'm going to do, I'm just going to flick over to my iPad. Okay, can everyone see that? So you should be able to see my iPad screen now. If everyone can just let me know. Yes, good. All right. Okay, so I'll just draw this up. Okay, so I'll explain what this triangle means, but the central part in here is profit. All right. So it's difficult to have great cash flow if you don't have great profits. All right. So that's really the foundation. Okay. So this is, I'll call this the cash flow triangle. Okay, so profits is the first step, and that's why I'm going to spend quite a bit of time on how to develop and improve the profitability of your business. Now, there are a lot of ways, but I'm just going to take you through one model that we use with our clients. But profit is the key. All right? That's the first step. Then you've got these other three areas, and I'll take you through these as part of the five keys that I'll be explaining. So first is debtors. Okay, so debtors are the people that owe you money. All right, so it's the amount of money that you are owed from your customers. Then you've got creditors. So they're your suppliers. All right, so they're the people you pay. And then in a lot of businesses, there's inventory. All right, so what I might do quickly is just get you to just type in what sort of business you have. Is it a service-based business? Is it a trades business, manufacturer? Now, I know a lot of you are at the executive center offices, so I suspect a lot of it might be service-based, but just so I have an understanding, I can relate these concepts back to you. And maybe let me know what sort of service business, if you're a professional, if you're a lawyer, or if you're, what type of service business. Engineering consultancy, good. Recruitment, excellent. General insurance broker. Okay, so there's a few, some mainly service-based, it looks like. So these three areas, these three tips of these triangles, we call that, they're the components of working capital. Now, don't need to get too, worried about the jargon. But so we've got profit in the middle here. So that's the key part. And then managing how you collect the money from your customers. How, organizing good payment terms and, arrangements with your creditors, your suppliers. And then inventory, obviously managing inventory, not holding too much of it. All right. So now for most of you, you'd have, this is probably not too much of an issue. It's service-based business. So in some ways, you've got that, you got a less complex business, because once you start looking at inventory, it's a lot of additional investment and cash tied up there. So most of you would have, customers to invoice and collect money from, and suppliers to pay. All right. So they're the key components of cash flow. I'm going to take you through those in more detail. All right. So I'm just going to flick back over to the presentation. So that's the first step, really understanding that they are the four components of cash flow, profit, debtors, creditors, and inventory. The second step is really understanding how to read your profit and loss statement and balance sheet. Okay, and this will all make sense as I go through some examples. So I'm going to mainly focus on the profit and loss statement. And these are the main components of your profit and loss statement. All right, so, and I've got an example on the next screen that will help you understand it a bit more clearly. But at the top, we've got sales. All right, so sales or income. Then you've got this, this group of costs called cost of sales. That's what COS stands for. So I really encourage you to, if you've got some note paper, take notes as you go. So cost of sales or variable costs. So they're costs that vary as your income varies. So let's say, for example, if we've got, Stephanie has an engineering consultancy, she may use contractors. So if she lands a big project or she's got an increase in, in volume and work for a certain month, she may contract some of that out. and her contractor costs will increase. All right, so that would be a variable cost because it varies as your income goes up and down. Most of the others probably on here probably wouldn't have many variable costs. That leaves you with a term called gross profit, which is your profit before all of your overhead or fixed costs. All right, so most of you on the call would probably have a lot of fixed costs. So rent would be one, presumably, as part of the executive centre. Staff costs that you pay fixed costs every month. There's your motor vehicle costs, there's insurance, accounting fees, all that type of thing. All right, and that leaves you with this net profit. So this is probably clearer to understand in this example I've put up on the screen now. So this is let's say this is a manufacturing business. They have 4 different products, different widgets. This is their total sales figure. They have some costs associated with those goods. That could be materials and production costs, and that gives them this gross profit. And then they've got all these fixed expenses, okay? And in this case, down here is their profit. All right, so that's really, so the profit and loss statement, it's not that complicated if you just break it down into those sections and understand those sections, okay? And the reason I'm going through it is because, as I said, profit is one of the key components of cash flow. So understanding how to read your profit and loss statement and looking at it more regularly and being comfortable with it is key. All right. And when you do that, most of you would probably be using something like Xero, I suspect, or QuickBooks Online or MYOB. All of those accounting packages, you can run a report that shows you, and make a note of this because it's very important to look at this report. It's your profit and loss that shows all of the months on the one page. Okay, so the great thing about that is that then you can compare. So let's say we've just had October, it's just finished. So if you print off a profit and loss that shows you this financial year, July, August, September, October, all on the one page, then you can compare October's figures to the previous months. And it's only if you've got something to compare it to that things will jump out. Okay, so you might say, oh, okay, wait a minute, why are my telephone costs so high this month? Or so it's good to look at your profit and loss in those with those multiple months in it. Okay. Now I don't want to spend too much time on the balance sheet, but a business balance sheet is exactly like our own personal balance sheets. All right, so we all have. We may have a house, a mortgage, and so on. So in assets, we have a house, we have cars, we have furniture. They're all our assets. Liabilities, we have loans. Whether it's mortgage, credit card, probably the 2 main ones. Other personal loans, and then the difference is what we call our equity or our net asset position. All right, and the business is exactly the same. All right, so don't get too concerned about that. But if you do, if your bookkeeper or your accountant wants to show you the balance sheet, then it's really as simple as that. A business will have, it might have equipment, it might have cash in the bank. Your debtors are an asset because they owe you money, so it's like a loan that you've given to them. And liabilities are the same. You might have credit cards, you'll have loans, leases, and so on. Okay. All right. So this is so that was really just a bit of background to help you understand the components of cash flow and how to read your profit and loss statement. This area here, this third area, is really a key part for you to understand and use in your business to grow your profitability. All right. So up on the screen here is what we call our profit growth formula. All right, it's something we use with all of our clients. And what I want to do is highlight that there's items in black and there's items in red. All right, so most people want to grow the items in red. All right, which is understandable. You want more customers, you want more revenue, and you want more profit. Okay, but they're the 3 areas that we actually tell our clients actually not to focus on specifically. All right, because they are the results of the 5 areas in black. All right, so you can see that there's an equal sign before every red item. So they're the results of other things. All right, so sure, we want to increase them, but we want to increase them by focusing on the other 5 areas. Right, so I'll just take you through those. So the first area is leads. All right, so how can we generate more leads or more inquiries? All right, and we might have a quick discussion about how to, some of the ways to do that for your businesses, like for your, the service type businesses. So first is, generating more leads. Second is conversion rate. How do we convert those leads into customers? All right, now I'm going to go through some numbers here to explain this and an example that will make it a lot clearer. So leads times conversion rate gives you customers. Actually, I'll bring that up now. So in this example, we've got 4,000 inquiries a year, of which 20% of those convert to customers. All right, so 800 customers. So let's say, whether or not this is your figures, but let's say there's 400 quotes a year. That might be high, but 4,000. It may not even be just quotes. It might be just people you've spoke to and have conversations with. Of those, you'll do some quotes, and then you'll convert those into customers. Right. So that's how that part of it works. Then you multiply the number of customers by the average value of each sale. Okay. So in this case, it's $200. And you multiply that by the number of transactions each customer has with you each year. All right. So in this case, these 800 customers come back and use you twice a year. All right. And spend on average $200. So what that does, if you multiply that out, is it gives you revenue of $320,000. All right. And then we've got a net profit margin. Once again, if we have our profit and loss, we know what these figures are, then we can do these sorts of calculations. So in this case, revenue 320, profit margin of 20% gives you a profit of $64,000 in the year. All right, so that's how this formula works. There's this profit formula. And as I said, it's all about focusing on improving each of these 5 areas. So how do we generate more leads? How do we improve our conversion rate? Okay. So let's talk about a few ways to do that. Now, I know you probably said it on other marketing discussions, so I'm not going to go there. I'm not the marketing expert in our business. It's Lucien. But for your business, for example, it'd be generating referral partnerships. Networking would be another way. You could niche into a particular segment of the market and do campaigns out there that will cut through the clutter and get people to, first of all, go onto your database. You might feed them with educational information, and over time, then they might make an inquiry or attend a webinar or a seminar that you go to, for example. All right. So there's a whole range of ways that you can generate more leads and more interest in what you do. Conversion rate is all about your sales process. So it's important that we present ourselves well. When we do quotes, they're presented well. We've got a good sales process, so you can map out. So all of our clients have a sales process that they've mapped out, like a flow chart, so they know all of the different steps in the sales process. And then it's all about then understanding what part of those steps we need to improve. So it could be improving the way we build rapport, if that's one of the steps. Improve the presentation of our quote, including case studies, including other information to give them confidence, testimonials. It could be just doing having a better follow-up process. Okay, so there's a whole range of things we can do to improve the sales effectiveness of our business and of ourselves. All right, so they're the first 2 areas. Obviously, if you improve those, then it improves the customers. Average sale, how can we get people to spend more with us? All right, so there's a few ways to do that. There could be, you could package things together for your clients. One key way would be to focus on better customers that are willing to spend more, right? But that comes back to marketing and positioning yourself in the market. There could be, different packages. Increasing your price is always one. I'll talk about that a bit later as well. All right, so there are ways to get people to spend more each time. Getting people to come back more often. So a couple of key ways that you might want to look at is definitely have a database. So if you are communicating more often, then there's more chance they're going to remember you and come back to you. So that's a key way. A lot of times people aren't aware of all the different services we provide. So Solicitor is a great example where, you know, someone comes to them for one thing, but they don't know that they do wills and other services that they can help, that you can help them with. All right, so really educating them about that. So look for ways, and we've got a whole sheet of strategies that we employ for different businesses. Okay, so a service-based business would have a totally different set of strategies than a trades business or a manufacturing business, for example. All right, so how do we improve, you know, that? And then down the bottom, you know, improve our margins. So that could be how effective, you know, how productive you and your team are. It could be relooking at your cost base. It could be increasing your prices, you know, getting better deals with your suppliers, a whole range of things there. All right. So one of the key strategies that and the key goals that we have with our clients, you know, whether they're our one-on-one clients or our group program clients, is getting on average a 25% increase in each of these 5 areas over 12 to 24 months. All right. So we're not expecting any major increases straight away. But if we can improve each of these by 5%, or, you know, maybe focus on conversion rate, improving that for this quarter, that might be the first focus. You know, improve your marketing. Always recommend that people focus on conversion rate first before they focus on new lead generation, because, you know, if you can improve your conversion rate from 20 to 30%, like from 20% to 30%, it's better to do that, so that when you do marketing and you're getting more leads, that you're converting more of those to customers, all right? Because marketing can be expensive depending on what you do. So it's all about improving each of these areas by 5 to 10% each quarter, okay? And over 12 to 24 months, aiming for an average of a 25% increase. So I'll show you what that looks like. All right, so if we improve each of these 5 areas by 25% over time, so that means your leads go from 4,000 a year to 5,000. Your conversion rate, we don't go from 20% to 45%. Now we work out, well, what is a quarter of 20, which is 5, and we add that 5 on. Okay, so it's only 25% now instead of 20%. Average dollar sale, once again, you know, increase that by 25%. Number of transactions. So on average, you know, some people might come back 3 times, others might stay at 2 times, but on average, get them back 2.5 times. So with all of those increases, what that has done is it's more than doubled our revenue and it's tripled our profit. All right, so that is what we aim to do with all of our clients, by focusing on these different components and other things in their business to double your profits, double your revenue in the next 12 to 24 months and triple your profit. All right, so that's I'm very big on knowing the numbers and focusing on these goals and looking at ways to tweak numbers and put in place strategies to achieve this sort of thing. Now, this is an example. Like, knowing these numbers are examples of what we call a KPI, which is a key performance indicator. All right, so they're numbers in the business that drive your profitability. All right, so these are some examples of them. Other examples could be, you know, making a set number of appointments every week. All right, or certain billable hours targets that you might have for your team. All right, so what I might do is just throw it over to you. If anyone wants to share some key numbers that they already look at in their business, apart from your profit and loss and your financials, any other key numbers that you might track on a week-to-week basis. So just grab your chat box and just type that in. I'd be keen to hear what others might be tracking in their business. So, for example, one of the things that Lucienne and I track is you know, a number of prospect discussions that we have every week and every month, referral meetings, you know, things like that, because we know that if we do that activity, then it leads to, you know, new customers down the track. Good. Stephanie's saying quotes. Great. Yep. So quotes submitted, the value of those, whether they're successful and unsuccessful, which is this conversion rate. Excellent. Employee productivity as well, from Stephanie. Paul said he's not really tracking, but he needs to. Very good. Kim, networking events, prospect engagement, and number of meetups and things like that. Excellent. Stephanie also tracks the amount of time spent quoting versus on projects and corporate activities. Paul said suggestions for database. I'm not sure what that means, but let's say if your database, if you communicate with the database regularly, if you can grow that database, I think that's a good number to track. How many people you have in your database as well. Oh, okay. So if Paul's asking about a way to track it, Kim said she uses Salesforce as a CRM. Now, Salesforce is a fantastic system. Probably caters more for the larger businesses because it can be quite pricey. Other options are things like Insightly, which is a Google product. That's very effective. But there's lots. There could be. I know. I can't remember who was the recruiter, but I know there are recruitment CRMs. Like specifically, there could be a CRM that's specific for your business and your industry, which would be good to look at as well. All right. So they're the first three. I'll go through the rest now. That was probably the area I wanted to spend the most time on, just really looking at strategies to improve your profitability, right? Because that's the key to having good cash flow. All right, now the second part, this fourth area is called the cash gap, understanding the cash gap and how to manage it. And as I said, a lot of businesses can go through cash difficulties and cash flow difficulties as they grow. And I want to explain why that happens. Now, this diagram up on the screen here, I'll explain that. So what we have is let's say it's a business that is a manufacturer, and it purchases its raw materials at the start of this cycle, so day 0. It has 30 days to pay that, its suppliers, right? So now if I go back to here, just going to go back to what I drew up here. Just take a note. Another word for debtors is receivables. Okay. Another word for creditors is payables. All right. So when you're speaking to your bookkeeper or your accountant, they might talk about your receivables. That's the same as your debtors. And same with payables, it's the same as your creditors. All right, so I mentioned that because this diagram talks about payables and receivables. All right, so purchase inventory here, you've got 30 days to pay it. It sits in your operations, your manufacturing operations, for 60 days before you actually finish working with it and then sell the product. All right, so on day 60 you sell the product, and then in this example, you've given your customers 60 days to pay. On average, they pay in 60 days. All right, so that's from day 60 through to day 120. So you have this gap from when you've paid for that inventory and when you've received the money from your customers. All right, so in this case, it's equivalent to 90 days. All right, from day 30 through to day 120. Now, let's say that. So 90 days is 3 months. So let's say that your business is turning over $10,000 a month. All right. So if you've got this cash gap of 90 days or 3 months, that means you need to find roughly $30,000 to support your business between when you've paid for things and when you've received money from your customers. All right. So that's $30,000. Now let's say your business ramps up and grows, and you now are turning over $100,000 a month instead of $10,000. And if you haven't done anything about this cash gap, then you now need to find 3 months. You still need to find 3 months worth of cash, but now that is $100,000 a month, which is $300,000. Okay, so as you can see, as your business grows, the value that's tied up in your operations grows as well. All right. Now we don't have inventory in most of these business. Most of you don't have inventory, but it could be staff. It could be your work in progress. So you might pay for your staff, and then you don't actually, depending on how productive they are, how often you can invoice at your jobs, you don't, you invoice out your customers and then you receive money from them after that. All right. So every business has this sort of cycle. So it's really key to understand, well, how do I need to either improve my payable terms with my customers. Okay. So become better at invoicing more regularly. You might be able to bring some of that forward. So when we work with our clients, when Lucien's doing website projects, we'll have a deposit up front, we'll have progress payments during the course of the project. We send reminders regularly. We're on top of those invoices and debtors. All right. So yeah, just really look at your invoicing and debtor collection process. And same with your, sorry, I've mixed it up there. That's over here. Your receivables is how you collect your invoices from your customers. Over here with your payables, definitely put in place terms with your suppliers. I've a landscaping client. When he goes through major projects and major tenders that he wins, he'll talk to his suppliers and he will organise terms, extended terms for particular projects. Especially when he's dealing with building clients and so on. All right. So a lot of times your suppliers will be flexible, and if they know that they're going to get a big order from you, they'll be flexible in terms of the payment terms. Okay. All right. So what I'm going to do is I'm going to send you all copies of this presentation afterwards, so you can refer back to this sort of thing. Okay. All right. So pricing is a very important area for us to focus on as well. And this graph really helps easily understand why pricing is so important. What I'll do first is just explain this base case. Now, in this example, a business sells its product for $100. Okay, it has $80 worth of costs, so therefore it makes $20 worth of profit. Now, if it discounts this product by 10%, which is this second graph or the second column, it goes from $100 to $90, so it sells now at $90. Its costs haven't changed, but its profit has halved from $20 to $10. Okay, so in this example, a 10% price change leads to a 50% change in your profitability. All right, so it's very, very important that you get your pricing right. So in this last column here, if we go instead from a 10% price reduction to a 10% price increase, so instead of $100, we're now charging $110. You can see that because costs stay the same, the profitability is improved by 50%. Okay, so very important to get your pricing right. And if you can increase prices and focus on parts of the market and position yourself to be more attractive to the sections of the market that are willing to pay more, or if you niche your product and service, it's a lot easier to charge a higher price. Okay, if they feel that you're the expert in a particular area, people will pay more for that. All right. I won't go through this. I'll send this to you anyway, but this is a very interesting matrix that shows you, if your margin is here, 40%, if you increase your price by 10%, you can actually afford to lose 20% of your business and still have the same profitability, right? So a lot of people are worried, we'll lose business if we increase price. And it does depend on the market that you have and the sort of customers that you're dealing with. But generally speaking, the customers you lose are the ones that are the difficult customers, that price shoppers anyway. And it's a good old 80-20 rule. You spend 80% of the time on them, but they only give you 20% of your profit. And you're probably better off without them and attracting more of the better customers. All right. So, but it just shows you how much business you can lose before you are, at the same spot, regardless of losing those customers. On the inverse side, it's very important to make sure we don't discount. Look at other ways to add value to your products instead of discounting. And once again, there's a matrix up here that shows you that if your margin is 40% and you discount by 10% your price, you need to find 33% more business for you to have the same profitability in the business. Okay, so it's quite frightening what discounting can do to your business. All right, they're the key areas. I think we're basically on time. It's been about 45 minutes. So as I said, I had to cover quite a lot there. I've been through it fairly quickly, but it should have given you a lot better understanding of what makes up cash flow, how to improve your profitability in particular, and what are the different components and how to manage that cash cycle. I'm open to questions, so if anyone wants to raise their hand, happy to unmute you, have a discussion, or just type in a question on any of those 5 areas. Okay, so feel free to raise your hand. There should be a little hand icon, so if I go back to some of the questions that people had at the start, someone said, cash negative business, struggle with cash flow. Once again, I would really look at your profitability, and if you've got high profitability, then it's got to be one of these areas. You're either not collecting your invoice, you're not invoicing quickly enough, you're not collecting it quickly enough, or maybe better ways to align your supplier payments or your contractor payments with how your customers pay you. But in a lot of cases, it's about improving profitability. Okay, so so I'd really be focused on looking at that. And I know we've gone through those 5 key areas. There's a lot of other ways we can tweak profitability in a business. So someone else had said, tips to manage cash flow when things are tight. I would also look at definitely, now that was Paul, do a cash flow forecast. It's something I do with all of our clients. If we know that, if we forecast and we know that January is going to be slow, how much buy? Does it mean that it's going to be a negative $10,000 month, for example? We need to make sure we've got enough profitability, once again, enough profitability up front to manage those down months. Generally speaking, January and April are the 2 months that people need to be concerned about. Possibly December coming into Christmas, depending on your business. But we know that December, January period can be slow, and then April because of Easter and Anzac Day. All right, so just let me look if there's any other questions here. All right, so just very quickly, a bit more about 9 pillars. So as I mentioned before, Lushen's part of the business focus on this area, helping you get more clients and better quality clients. One of the frustrations that we see is seeing people who are very busy but not making the money that they should be making. All right, so sometimes it could be that you might be busy on clients that just aren't paying you enough. So it is about getting more of the right sorts of clients. As I said, my focus is about helping clients become more profitable, managing their team and their systems and planning processes. We traditionally have worked with one-on-one clients, but we have also recently launched a group program, and there's information about that here. All right, so a very low-cost program where basically any business can afford. Everyone has a plan. Everyone has. We have 2 meetings a month, which is online, and then we get everyone together once every quarter, and we track everyone's KPIs, key numbers, how you're progressing with your goals. So it's a very it's a lot of hand holding, I suppose, and a lot of close connection, unlike a lot of other group programs, which are just education and not a lot of accountability or progress. So lastly, what I'd like to do is really just offer to you, as part of our relationship with Kim and the Executive Centre, a complimentary profit boost session. All right, so that's really a complimentary 20 to 30 minute call where you can tell me about your specific business, and happy to give you some ideas and some brainstorming around things that you can do to improve your profitability. All right. So what I'll do is I'll shoot across a link to my calendar. You can book an appointment straight in there, and happy to do that and help out where we can. Kim, I might just, do you want to just unmute yourself? I don't know if there's anything. Oh, there you are.
Where am I? Okay.
Excellent.
Thank you so much, Anil. I really appreciate the time that you've given up to come and talk us through this. It's been brilliant. I'll leave you to send out the slides and the email, but if you need any help with that, please just reach out to me.
Okay.
And thank you everyone for joining. We appreciate you giving up your lunchtime as well to come and learn about profit loss, understanding your cash flow, and what we went through today. So we really appreciate that. And if you have any more questions, please don't hesitate to ask, and I can also help put you in touch with Anil later on if you need to.
Yeah. I know it's not the financial management's not the sexiest topic, but it's as we know, it's critical and vital. So thank you very much, Kim, for organising it, for inviting us to present. Really appreciate that.
Not at all. Thank you.
And, we'll speak soon.
Definitely. Thank you, everyone. Have a great afternoon.
Okay. Cheers. Thanks, Kim.
Bye.